Hello, welcome to another video from Accounting How. In this video, we're going to look at how to prepare a sole trader income statement from a trial balance with additional information. Please remember to subscribe to the channel, like, share the videos, and you can also follow us on X at Accounting How. Okay, here we go then with a question. Just before we read the question, I'm going to be focusing in this video on how to prepare the profit and loss section of the income statement. So the trading section has already been prepared in this question up until the gross profit. I have got another video which talks you through how to prepare the trading section of an income statement for a sole trader. I'll pop the link in the description below. So this one then, let's have a look. The information below is for Nina, a sole trader at the 31st December 2023. And I have a quick look down the information and I can see carriage outwards, some discount, equipment at cost, some expenses. There's the gross profit figure. So as I say, Nina's already done the trading section of her income statement. And so I'm going to be starting with that gross profit figure in a moment. Some heating expenses, some motor vehicles, depreciation. She's got a provision for doubtful debts. And then it looks like she's got rent that she pays, but also rent that she receives. And they've given me the trade receivables. And then underneath, I've got 7 items of additional information that I will need to deal with. And the question is asking me to prepare the income statement then for the year ended 31st December 2023. And you'll see I've laid it out ready to go with a who, what, when title. Nina, what is it? An income statement and when for the year ended 31st December 2023. So in the profit and loss section of an income statement, we need to record then any income other than revenue, which would go in the trading section, but any other incomes that Nina has received, and we will need to record any expenses other than the expenses which will have gone in the trading section, such as purchases and carriage inwards. So a little tip is to go through the information and just identify what is an income and what is an expense so that we don't miss anything out when we come to prepare it. So looking through the information on the left then more carefully, the first item, carriage outwards. So carriage is like a delivery charge, a cost of transporting goods or materials. So carriage outwards would be Nina paying for presumably finished products, whatever it is she sells, to be delivered to customers. And so she's ended up paying £155 for that. So that's going to be an expense. So you'll see I'm just starting to annotate then. So I put a little E next to that for E for expense. Discount received. So she has received a bit of discount. This would be cash discount. So discount that she's received from some of her trade payables for basically paying her invoices quickly. And it's in the credit column confirming that it is indeed an income. Although she wasn't given the money, she just didn't have to pay the money in the first place. When she came to pay that bill for her trade payable, she received some discount, so she didn't have to pay as much. So that's why we treat it as an income, because it's like money that she saved. They've given me equipment at cost. Well, equipment, that's going to be an asset. So that won't be recorded in the income statement because assets go into the statement of financial position. And maybe I'll need that figure in a little while, but I'm not going to label it for this question because it's neither an expense nor an income. General expenses are obviously an expense, so I'll put an E there. The gross profit we've already mentioned, that will be my starting figure. Heating and lighting, £1,690 in the debit column. So another expense, that's what she's been paying for those heating and lighting costs. Motor vehicles, an asset, so I'll leave that one. Then they've given me the provision for depreciation on equipment and motor vehicles. So this is the amount that she has depreciated these two assets by up until now. So last year, the year before, she's been depreciating, and these are, if you like, the latest balances that we've been provided with. These balances might have to be amended. but then these balances will end up in the SFP again, in the statement of financial position. Provisions for depreciation, the balances don't go into the income statement, so I'll leave those for a minute. Provision for doubtful debts, similar to the provision for depreciation. This is then the balance, the latest balance we've been given for her provision for doubtful debts, £560. Again, that won't go into the income statement, so I'll leave that for a minute. Rent paid in the debit column, so that's an expense. That's what she's been paying to rent the shop, the warehouse, wherever she is. Rent received, so she's also been receiving some rent from somewhere. So it's in the credit column, confirming that this is an income. And then finally, I've got trade receivables. So this is the amount that her credit customers owe her. Trade receivables are an asset. Assets go in the SFP, not in the income statement. So again, I don't need to enter that one. Additional information. So have a little look down these, see what we're going to deal with them. So item 1 says £400 for heating was due but not paid at the 31st December 23. So this is what's known as an accrual. She's got an expense that she is outstanding, an expense that is owing. She hasn't paid for it. She's had the benefit of the heating during the year ended 31st December 23, but she hasn't yet paid this £400 for the heating. But it does relate to this year because she's used the heating this year. So that's going to be an expense. It's going to affect the heating and lighting. So I'm going to deal with it when I do the income statement. But for now, I'm just going to put a little e to remind me that it is going to affect one of her expenses. Item 2, a trade receivable who owed £850 has gone into liquidation and the amount owing is to be written off. So one of her credit customers has so liquidation, they've gone bankrupt, they can't pay. She's been notified and she's just going to write this debt off. So that's basically cost her £850. She just lost that £850. So to her, that's going to be an expense. So I need to deal with that in a little while. So I'll put another E ready. The rent paid figure includes £5,400 for the 6 months ending 31st of May 2024. So rent paid, we already said, was an expense. So item 3 is going to affect that rent paid figure. So I'm just going to remind myself there. £150 of rent has been received in advance. So this is now to do with the rent received, which we said was an income. So when I come to record that in a moment, I need to remember to deal with that. So I'm just going to put an I there to remind me. Equipment is depreciated using the straight line method at a rate of 10% per annum. So we need to work out how much we're writing off this year as the equipment's got that little bit older, that bit more wear and tear. And the bit that we write off will be an expense. So I'm going to put an E ready. Similarly, motor vehicles need depreciating, this time reducing balance, but that's going to be another expense. We've got to write off a bit more of their value. And then finally, it says the provision for doubtful debts is to be maintained at 2.5% of trade receivables outstanding at the year end. Now, the thing with provisions for doubtful debts is we know from the beginning of the question she's already got a provision of £560. The provision for doubtful debts, because the value of the trade receivables will go up and down as each year goes by, the balance in the provision account will need to be adjusted. But we don't know whether it will need to go up or down. So at this stage, I'm just going to put I or E. That could end up being an income. It could end up being an expense, and we'll look at it when we get there. So just a little bit of planning helps us just read through the question and be prepared for some of the things we've got to deal with. So let's start putting things in then. As we said, we've already got our title ready, and we're going to pick up with her gross profit because, as we've said, she's already done the trading section. So gross profit, 27,490. And then what I'm doing is I'm looking for any other incomes that I can add on. The main source of income for businesses is coming from the sales, the revenue, but remember that's recorded right at the beginning of the income statement in the trading section. So here we're just looking for other bits of income that Nina has received. And because I've done the planning, it's a little bit easier now because I'm just looking for the I's. So the first I we put next to discount received. In the additional information, it didn't say anything about discount received, so that figure must just be right as it is then. I can just put it straight in. So we're going to be adding the discount received of £240. And then over on the other side, I like to just put a little tick. I've just put a green tick there because it just reminds me I've dealt with that, and then I'm ready to move on to the next thing. So the next thing we've got an I next to is the rent received. And in the trial balance, it says rent received £3,200. But underneath, if we look at point number 4, we were told £150 of rent has been received in advance. So what she's got here, you may have heard of income due and income received in advance. And here we've got income that's been received in advance. So whoever is paying her this rent has paid her £150 in a way, before they needed to, if you want to think of it like that. They've paid it to her before they've actually had the benefit of whatever it is they're renting. Maybe they pay a month ahead, so they give her the rent and then they use the property. So the point is that £150, because it's been received in advance, that doesn't relate to this year. So Nina needs to remove that from her income statement for the year ended 31st December 2023. So what I'm going to do, let me put it in now, there we go. So I'm recording the rent received, but you'll see I've shown a working in brackets. So I've put 3,200, the original amount, but I'm taking away this part of it, the income bit that was received in advance. That 150 will relate to next year, not this year. If I was going on to do the SFP, income received in advance, Nina would need to treat as a liability. So in her current liability section, she would have current liabilities, and one of them would be rent received in advance, £150. And I'm going to put a green tick then next to the rent and also next to item 4 because I've dealt with those two things. Any other I's? Well, I'm just down to additional information 7. And I just need to work out at this point whether the provision for doubtful debts needs to be increased or decreased, because this will affect where I need to put it in the income statement. So I'm going to start a working for this one and get a working box. There we go. And this is going to be my first working for the question. So I'm going to call it W1, working number 1. And what do I know then about her trade receivables? So it tells me the final figure in the trial balance. Her trade receivables are £19,250. But they've been a little bit sneaky in this question because do you remember item 2 in the additional information? Let's go back to item 2. It says a trade receivable who owed £850 has gone into liquidation and the amount owing is to be written off. So that £19,250 includes this debt that we've got to write off. So the first thing I'm going to do then is take that £850 out. So that now gives me a figure for trade receivables of £18,400. And then if I go to point number 7, the provision for doubtful debts is to be maintained at 2.5% of the trade receivables outstanding at the year end. So we've now got the correct figure for the trade receivables, 18,400. So I'm going to find 2.5% of 18,400, which is £460. So Nina needs to have a provision for doubtful debts. This complies with the prudence concept of £460. And what has she got currently? Well, if I look back in the trial balance, it tells me her provision for doubtful debts, the balance in that account is currently £560. So she, in this case, needs to decrease her provision for doubtful debts from £560 down to £100. So by £560 down to £460. She needs to decrease it by £100. Well, this in a way is good news. She's being cautious, she's being prudent. She's saying, okay, I might not get all of this money from my trade receivables, but because it's going down, that's if you want to think of it like this, good news to her. So a decrease in provision for doubtful debts we treat as income. So what I'm going to do with that £100, I'm now going to put it into my income statement. There it comes, a decrease in provision for doubtful debts, and I'm adding on that £100. You'll see I've just put in brackets after my narrative W1, working 1. Lots of these figures in income statements have more than one mark. 2 marks, 3 marks. There have been questions where they're 4 or 5 marks even if there's a lot of workings to do. So it's really, really important to show clear workings in these sorts of questions. If you can fit the workings in brackets, like I was able to with the rent received, I could just do that there. That's absolutely fine. It's a quick working that anybody looking at it can see. But when it comes to something like the decrease in provision for doubtful debts, you can see from my working box, there were a few steps involved. So you're never going to fit all that in brackets next to the narrative. So just W1, working number 1, and then underneath your income statement, have the clear working laid out. And then I can go back to then some ticking off. So I'm going to tick item number 7 because I've now dealt with item number 7. And there are no more I's, so I've dealt with all of the incomes, and so I'm now going to total up the income statement to here, so that gross profit 27490, add these 3 other incomes, gets me to £30,880. Okay, now then I'm on to the expenses stage. So I've got a side heading, less expenses. And I'm just going to go from the top to the bottom again, working through then the list, looking out this time for the E's. So the first one was the carriage outwards. I don't remember reading anything about that in the additional information, so that can just go straight in, 155. And then little green tick dealt with. Next E, the general expenses. Again, I don't remember reading anything about that one, so I'm going to put that straight in, and a little green tick, that one's done. The next E goes with the heating and lighting, and we were told in the trial balance the heating and lighting £1,690, but item number 1 underneath tells me £400 for heating was due but not paid. So if you remember, we said this is an accrual. She has used this heating during the year ended December, £400 worth of heating, but she hasn't physically paid for it yet. But the use of that heating, the benefit of that heating has happened during the year ended 31st December 23. So to comply with the accruals concept, we need to include this in her income statement as an expense. So let me put it in then, there we go. I've just about got enough room to show the working in brackets. So heating and lighting, I've got the £1,690, but I need to add on this accrual, this £400. So the heating and lighting that relates to this year is now £2,090. Yes, she's only paid £1,690 of it, but from the income statement point of view, we need to calculate an accurate profit. So we need to include the total value of all of the heating and lighting that she's used this year, which is £2,090. If I was doing the SFP, she owes that £400, so that would be treated as a current liability, and accrual is a current liability. So she would have in her current liabilities, in her SFP, a heating and lighting accrual of £400. And let's get some ticks going. So we've done the heating and lighting there, and we've dealt with item 1. Next thing then, I have got the rent that she's been paying. So it says rent paid £15,200. But item number 3 told me the rent paid includes £5,400 for the 6 months ending 31st of May 2024. So I'm going to need a little bit of working here then. Let me get another working box going. I'll put my narrative ready. So this is going to be for the rent. And you'll see now I've moved on to W2, working number 2. And in my workings then, let's see where we are. So if I go back to this item number 3, so in that rent paid figure, it says that includes £5,400 rent for the 6 months ending 31st of May 2024. We're only doing her income statement up until the 31st of December 2023. So what we've got here is a prepayment. She has prepaid some of her rent for next year. Well, I don't want next year's rent in this year's income statement because that won't get me a true and fair, accurate profit for the year. So the first thing I'm going to do is work out the monthly rent cost. So here come my workings. So £5,400. We're told that covers 6 months. So divide by 6 equals 900. So the rent is for £900 a month. The rent is £900 a month. And we've been told that this is for the 6 months ending 31st of May 2024. So if we're running up to the end of May, work backwards. So we must be starting on the 1st of December 2023, because that would give me 6 months. I'd have December, January, February, March, April, May. And let's put these in here so we can just see it visually. So there are the 6 months that £5,400 covers. That's the period it covers. But you'll see I've highlighted 5 of the months. That's because those months, January, February, March, April, May, happen after this income statement is being prepared in the future time period. So those 5 months don't want to go in this income statement. They don't relate to the year ended 31st December. So we know that we've just worked out the rent is £900 a month. So I'm now going to multiply 900 by 5 months, gets me to 4,500. So of that £5,400, 4,500 of it is a prepayment. It relates to the first 5 months of 2024. So in order to get the accurate rent figure then for this income statement, I'm now going to take the figure from the trial balance, the 15,200, and I'm going to subtract the 4,500 prepayment. Means the rent figure is now 10,700, and I can put that into my income statement. And again, I can put a green tick in the trial balance, and I've also now dealt with item 3. Okay, what have we got left? So next thing then, I'm down into the additional information. Item 2, a trade receivable who owed £850 has gone into liquidation. The amount is to be written off. So this is known as an irrecoverable debt, or sometimes it's known as a bad debt. Either way, Nina's effectively just been told she's not going to get this £850 now that this customer owed her, and she's made the decision to write it off. So that's an expense to her. So I'm just going to record it. There we go. And tick that one off. That one is done. And so I'm left with items 5 and 6, which are the 2 depreciations. So let's have a look at the first one. Item 5 is the equipment depreciation. And they've told us the equipment is depreciated using the straight line method at a rate of 10% per annum. Straight line depreciation is based on the cost of the asset, the original cost, and it can be done using a formula or using a percentage. In this case, they've given me a percentage. So I've just got to simply write off another 10% of the cost of the equipment. And if I look towards the top of the trial balance, I can see they've given me there the equipment at cost was £14,800. And we just need to write off another 10% of that. And so I can just about fit that in brackets, I reckon, they're working. If you can't, then move on through, you'd now be on working number 3. But so I've got depreciation on equipment, 14,800 times 10%, £1,480. What's important just to note here is that the 1,480, that's just the charge for this year. That isn't the total balance of depreciation that she's done on equipment. That's the bit more, because it's got a bit older, a bit more wear and tear this year. We're writing off another £1,480. And in the income statement, we just put in there the increase, the extra amount that we're writing off this year. If you look back on her trial balance, you will see just over halfway down, it says provision for depreciation on equipment, £2,030. Well, that's what she's written off in previous years. And now we've written off another 1,480. So if I was to do the SFP, I would add both those 2 figures together, and then that would give me the new balance for depreciation, which would come off the non-current asset, the equipment in the non-current assets section. And I can tick that one off. And the final one then is the motor vehicles, and it says the motor vehicles are depreciated using the reducing balance method at a rate of 30% per annum. The reducing balance method is based on the net book value. So straight line is based on the cost of the asset. So like the equipment, we did 10% of the cost, but reducing balance is based on the net book value. So I'm going to need a bit of a working, I think here. I'm not going to be able to fit all this in brackets. So I'm going to have my narrative ready. Depreciation on motor vehicles. I'm now on working number 3. Let me get a working box running. There we go. So what do I know then? So net book value is the cost take away any depreciation that's already been done, sometimes known as the accumulated depreciation or the depreciation to date. So the cost of the motor vehicles, it tells me halfway down the trial balance, motor vehicles at cost, 17,600. I also can see in the trial balance the provision for depreciation on motor vehicles, 3,450. So if I take then the depreciation that's already been done, the 3,450, away from the cost, 17,600, it gives me a net book value of £14,150. And we need to, because these vehicles are getting a bit older, a bit more wear and tear, I need to take off another 30%, but this time of the net book value, because it's reducing balance depreciation. So £14,150 times 30%, or 30% of that is 4,245. So the amount, the extra wear and tear that we're writing off from these vehicles this year, 4,245, and I can put that then into my income statement. There we go. And I can have a final tick because I've now dealt with item number 6. So I've gone through all the information, both in the trial balance and the additional information, dealing with any adjustments as I went. Just I forgot to mention, but I'll just mention it now. In terms of the rent, if you just think back to item number 3 for a moment, the rent paid, we said she had prepaid her rent by 5 months. If I was doing the SFP, the Statement of Financial Position, a prepayment is treated as an asset, as a current asset. So in her current assets section, she would have rent prepaid and she would have the 5 months, the 4,500 that she has prepaid. So all that's left to do then is do some totaling. So I'm going to add up all of her expenses and they come to £21,620. And then I'm just simply going to take that figure away from the 30,880, the gross profit plus the other incomes. And it's looking good for Nina because it looks like she's made a bit of profit after all that. And her profit for the year is £9,260. And then there is my income statement complete for Nina. Hope that's been useful then. Please do remember to subscribe to the channel, like, share, comment below, and you can also follow us on X.